Hello, my people. It's my hope that you are well and you are doing well. It's my hope that the Lord has kept you safe. Welcome aboard to another video where we are going to discuss about one of the things that we have been discussing most in this channel. That is the treasury bonds. And nowadays, it is almost certain that the government of Kenya will issue a treasury bond every month. That is through the Central Bank of Kenya. And here we have the April deals that has already been floated by the Central Bank of Kenya. And that is what I want us to discuss in the next few minutes. By now, if you have been following this channel now for close to 1 year, I'm sure there is nothing new to you here, but we are just going to pass through them so that we can get to understand what are the specific features of the bonds that have been floated that are available for the April auction 2025. So, and in case you are coming across this channel for the first time, in case you are coming across the word treasury bonds for the first time, you can just give a small highlight of what treasury bonds are, so that we can be on the same page. But you can always get to the video where we have described everything in details. But just for a highlight, treasury bonds is one of the financial investment vehicles that are in our financial system, and it simply means lending to the government on a long-term basis. As we will see, we will be talking about investments that are always greater than 1 year. So it is a financial instrument that Kenyans get to lend to the government. The same way, okay, anytime that the CS Treasury or whoever is talking about debts, he will always classify the debts in two classes. We have the external debt or the foreign debt, and the internal or the domestic debt. Now, the government gets the domestic debt through the treasury bonds and the treasury bills. Treasury bills are short-term, treasury bonds are long-term. So the government gets to benefit by getting money to support its budget and its project. And what you get to benefit in return by lending to the government is the interest that you gain. So that in a nutshell is what we call treasury bonds. So for the month of April 2025, we have 3 bonds that have been reopened. And reopening means that these are bonds that were already issued in previous years, but they have been reopened. Investors have been given another chance to invest in them. So we have the three of them that has been reopened. So I want us to go through the key features of each of them, so that we can get to understand what is on offer, what do we start to gain for anyone who might be interested. So, and allow me to start with the first bond. I have not arranged them in any order. So, let's start with the bond number 1. And the bond number 1 is the FXD1 stroke 2020 stroke 015. And as we always say, a title can always tell you 3 things. Number 1, from the FXD1, you can just tell it is not an infrastructure bond. So the interest that you get to gain from this bond is subject to withholding tax. Number 2, 2020, the bond was issued in 2020, and the original tenor of the bond was 15 years. We are done with the title. Now, time to maturity. The bond was originally issued for 15 years, but it was issued in 2020 with a tenor of 15 years, but we are already in 2025. So the remaining time to maturity is about 9.9 years. So we are talking about an investment that will get to last for 9.9 years. Then the coupon rate, this is the interest rate at which you will be paid interest for the principal amount that you get to invest. It is at 12.7560, and we can consider this as a competitive interest, given the times that we are dealing with, where the interest of the government securities, that is the treasury bills, that can give us an overview of the current rates, already at single digit, ranging between 8% and 10%. So 12.756%, we can say it's quite competitive. We have said that the interest that you earn is subject to withholding tax. It is subject to 10% withholding tax. The interest that you get, you'll just take 90% of it home. 20% will have to go to the taxman. Then the period of sale. These bonds were floated on the 20th of March, and the bidding will be closing on the 2nd of April 2025. So that is the period of sale. Period of sale is like that time you hear that a certain company has, or a certain comedian or musician has an event, and there's a period in which they focus on selling the tickets. So that is the same. That period that the musician will be selling tickets, this is the same period that the government of Kenya, through the Central Bank of Kenya, will be taking bids for the reopened bonds. And we have the submission deadline. The latest date that you can submit your bid is on the 2nd of April 2025 by 10 a.m. And if you wish to invest in these bonds, don't wait until it is on the deadline, or like, do it as early as you can. Make your decision and get to place your bid as early as you can. Then the settlement date. This is the date that you are supposed to have paid for your bond once your bid is successful. That will be on the 7th of April 2025. Of course, the minimum amount that you can invest is 50,000, and any additional amount must be a multiple of 50,000. That is 50,000, 100,000, 150,000, 200,000, all the way. Then we have the prices. We are talking about reopened bonds, and when we discuss reopened bonds, we really discussed what we call the clean price, the dirty price, and what we get a combination of the two, that is the dirty price. So from some speculations, the dirty price of this particular bond is likely to be 101.6785, meaning that if you want to invest 100,000, you will not send to the CBK 100,000. You will send 101,678. You can check my video on reopened bonds, where we are explaining what brings all this about: the clean price, the accrued interest, and the dirty price. In fact, I'll place the video of reopened bonds on the first comment of this video, so you can just check and get to have a deeper understanding of all that. Then the coupon payment, we say that bonds pays the interest in 2 installments. That is, so this particular bond will be paying interest on the month of August and February. Then calculation of coupon is very simple. It is the coupon rate times, I'm taking an example of an investor who gets to invest 100,000, 12.75% times 100,000. Then we are multiplied by 0.9 because 10% is withholding tax. So our interest per annum comes to 11,480, which will be paid in 2 installments. So meaning that you receive 5740 in August, and you receive another 5740 in the month of February. So that is all you need to know about the FXD1 stroke 2020 stroke 015. We go to the second bond. Of course, I have explained a lot about the first bond, and it is the same concept. So we just mention as we move. From the title, we can see it is FXD1 stroke 2022 stroke 015. And we can tell it is still taxable the taxman has to take away a portion. It was issued in 2022, just as the other one that we have just seen. The other one was 2020, this one was 2022. The tenor was 15 years. So when we come to time to maturity, some years has passed, so the remaining tenor to maturity is 12.1 years. The coupon rate is quite higher than the other one, is 13.942%. And we can say that it is still quite competitive, given that currently the rates are already at single digits, 8 to 10%. So it's quite competitive. Withholding tax still at 10%. Period of sale is the same for all the three bonds. That is from the 20th of March 2025 to the 2nd of April 2025. Submission deadline is the same, 2nd of April by 10 a.m. The settlement date is the same, that is the 7th of April 2025. The minimum amount is the same, is 50,000, and any additional amount must be a multiple of 50,000. That is 50,000, 100, 150, 200, 250, 300, all the way. When we come to the price, we have talked about the clean price, the accrued interest, and the dirty price. The price is determined by the yield of the bond at that particular time of bidding. But one of the prospect prices, one of the possible prices for the bond is 106.4179. This is quite expensive compared to the one that we have just seen. And maybe what is making it a bit expensive, it might be on demand because it is paying quite a higher interest. So this means that if you want to invest 100,000, you will not pay 100,000, but you will pay 106,417.9. This is what it means. It's dirty price being at 106.4179. Then the coupon payment is paid on the month of April and October. Then we can go to coupon calculation. That is 13.942 times 100,000 times 0.9, because 10% is going to the taxman. We get to 12,547 per annum, but the interest is paid in two installments. That is 62.73 in April and 62.73 in October. Then we can go to the third one. That is the FXD1/2022/025. The same story, we can tell that it is taxable FXD1. It was issued in 2022, and the original tenor was 25 years. Of course, we are in 2025, so around 3 years has elapsed. So the remaining time to maturity is 22.6 years. So we say that bonds are quite long term. You can just get the time to maturities that we are talking about. So here we are talking about putting your money where you can stick up to a period of 22.6 years. I know it sounds a lot, but maybe it is not that long as it sounds. Then the coupon rate is at 14.188%, quite competitive again, because we are currently at a very low interest rates era, where we have the government securities, which are short-term issued on a weekly basis, that is the Treasury bills, paying interest of as low as 8%. So getting a 14% is quite competitive. I would consider that as a quite competitive interest rate. Then the interest attracts a withholding tax of 10%. That means that out of the interest that you gain, the taxman will take away 10%. We get to the period of sale, the same, from the 20th of March to the 2nd of April 2025. So the deadline for submission of the bid is 2nd April 10 a.m. The settlement date, that is the date by which you should have send your money to the Central Bank of Kenya after your bid is successful will be on the 7th of April 2025. The minimum amount as usual is 50,000. The price, one of the probable dirty price of that bond is 106.53. What it means is that if you intend to invest 100,000, you'll pay 106,530. And I have said that I have discussed the clean price, the accrued interest, and the dirty price, and the whole concept in a very separate video. So I will put the link on of that video on the comment of this video, so that you can go and check and have a deeper understanding of what are all these that we are talking about: the clean price, the accrued interest, the dirty price. Then the bond pays interest in the month of April and October. So then we go to the coupon calculation and see how much you start to gain, using an example of an investor who puts in 100,000. So that is 14.18% times 100,000. We multiply by 0.9 because the 10% belongs to the taxman. So it gets to 12,769 per annum. And so divide that by 2 because the interest is paid in 2 installments. So you get 63.84 in April, and you get 63.84 in October. So those are the deals that are on offer for the month of April. It is a good thing that you can try, though it is a low risk, a low return investment, but you can chip in and try. If you have some funds, if you have some idle funds lying somewhere, before you get to decide what to do with them, though this is quite long term, but it does not mean that you should hold you should always hold the board for the 9.9, 12 or 22 years. Of course, you can always liquidate, but it comes with its own consequences. But if you have some idle funds lying somewhere, it is one of the things that you can try, especially those people who are not willing to take a lot of risk, because it is considered quite a low risk investment. And I can assure you that getting those notifications of those coupons coming in, maybe even when you least expect them, is quite good. So it is a thing that you can try. Then there are of course the factors that you can consider. Now that we have 3 bonds that are on offer, there are the factors that you can get to consider. Of course, number 1 is the time to maturity, depending on how long you are willing to commit your funds. Maybe you are not willing to commit your funds for so long, like 22 years. So you can, the element of time can force you to go for the bond paying at the lowest coupon rate. The other thing that you can consider is the coupon rate. That is, we are human beings, so the more the interest rate, the more we get attracted. So considering interest rate, you'll get to run for that 14.188 bond. But when it comes to reopened bonds, you need to compare the coupon rate and the price. The bond might pay a very good coupon rate, but the bond might also be very, very expensive. So we'll do some calculation in a different video so that we can get to see which bond is good, comparing the coupon rate and the prices, and we'll get to see. Other thing you can consider is the month which the installment is paid. You see, one of the intentions that you can have as a bond investor is ensuring that you have a coupon payment every month. So you can take this one if you don't have any passive income in the months of August and February. You can split your amount between the 2 bonds so that you can have some amount in August, February, April, and October. So you only need like 6 bonds, and you'll have some you'll have some passive income, like for every other month. So it is also a factor that you can consider. So otherwise, those are the offers that are on for the months of April 2025. In case you have any query about the bonds, don't shy off from asking, and I will be willing and will be glad to respond to you.